you see the volatility, and it could be quite stifling for some. What does it look like under the hood?
Hello, Sonali. It looks like it's peakish, unfortunately. We've seen some pretty significant future shenanigans. That's mostly the CME traded copper making new highs around $5.13 a pound. And the LME traded copper hasn't. So it's the CME traded copper is getting way too stretched, a little bit long. Futures positions are in there. The thing that's unique about it is it's the curve. So it's only the front contracts that are breaking out. The back ones have stayed behind. And that's usually what happens when markets make peaks. I remember silver in 2011, when it made a peak around 50 bucks, it had a similar nuance. The question is duration here.
Well, you're talking about shenanigans under the surface as well. I mean, part of this issue that we're seeing for traders is a massive short squeeze going on in the markets. Talk a little about the market structure dynamics we're seeing here.
Well, that's the unique thing about it. In a short squeeze, you just see open interest decline. But on the CME traded contract, the one that really spiked, it hasn't declined. It's really declined on the LME traded contract. And I've been pointing out, if you look at managed money net positions, i.e. hedge funds, these are the leveraged traders. They're about the most long copper, about 30% of open interest in almost 3 years. So the market's been very long, as you pointed out. It's been riding that rally. So what's happening now is some of the nuances, I think, of trading within the front contracts between the back contracts. And what's unique is when you get that front contract in copper, it got to about 6% above the back price, the 1 year back. That's the most it's done since 2008, which is a bit of a dicey number.
What about the leverage under the surface? You alluded to some of the levered contracts being the most hit here, really. So how big is that exposure?
Yes, so right now, the total net longs from hedge funds, called managed money net positions, as of the last reading was about 30% of open interest. That's the highest in about 3 or 4 years. Right when copper was making its peak, right before Russia's invasion of Ukraine, and then headed lower. So that's an example of the problem. The market's way very long here now, and it's showing that lately. It put in the spike around 5. It's tilting now back around below 5, around 490 at the moment. So to me, the risk is that those positions might be sparked to liquidate. It now needs some kind of fundamental backing, and it had that little spike to cover some of the shorts. So that's the unique thing about it. Positions are a bit long for a short squeeze.